Hey everybody, welcome back to the channel. Today we're going to be going a little bit more in depth into the questions that were answered on the Palantir recent earnings call that happened yesterday. So Say Technologies is a platform that allows people to ask questions, and essentially the best questions that get picked by Palantir are the ones that are answered, or any other company that uses this platform. And it's integrated with Robinhood, it's integrated with a lot of other brokerages, so it's a really easy platform to use. So there were about 6 questions that retail asked that Palantir ultimately picked as the questions they wanted to answer. Now they have full jurisdiction over which questions they want to pick, so they're not going to pick the hardest questions in the world, but they decently picked some questions that I think gave shareholders a little bit more of credibility in terms of what Palantir is trying to do in those specific topics, and more clarity in terms of how Palantir is trying to approach those situations. So I want to go through all 6 of those today because it seems like they were kind of pre-written or pre-recorded to some extent, but these were the questions that were picked, and ultimately these were the answers that Palantir did for them. So let's go through the first one. What will Palantir do to reduce share dilution? This got 1.6K upvotes by Daniel L. So obviously Palantir was concerned about this question because they still feel that people don't understand what's going on with share dilution. So Dave Glazer, the CFO, says this is actually something that is repeatedly misunderstood. And when I heard him on the call say it, it kind of felt like he was annoyed answering this question. If you take a look at last year, we only added 0.004% in fully diluted shares outstanding in the entire year. If you flip to the first quarter of this year, that fully diluted number actually declined for the quarter. So you literally ended Q1 with fewer shares than when it started. Reasonable. Share dilution is still, there's 2 billion shares outstanding, so I can understand how people can get annoyed at something like share dilution. Again, if you understand a company like Palantir, you would understand why they have that share dilution, but nonetheless, it's going down, which is a good thing at the end of the day. When is the company targeting to be GAAP profitable? CFO David Glazer says. So we had a negative 9% GAAP operating margin in Q1, an improvement from a negative 14% in Q4 and from negative 33% in Q1 2021. So in Q1 2021, they were losing 33 cents on the dollar. Then it was 14 cents on the dollar at the end of the year. Now it's only 9 cents on the dollar. That's good. GAAP operating margin, generally accepted accounting principles. These are the ways that Wall Street measures if you're profitable or not. There is something called adjusted operating margin, where you take off something like stock-based compensation or taxes, and then you get to like what the company would be profitable for if they didn't have that. And Palantir would be making around 27 to 28% margins of pure profit if they didn't have SBC. But because they do, they are not profitable, but they're getting closer to profitability. So we're making significant progress, and Q1 was our strongest GAAP one quarter to date. And not to mention last year, for the full year, we've already posted $424 million in adjusted free cash flow with 31% adjusted operating margin, as I just said. And we've already had a strong start to this year, but with that being said, we're preparing for a world that has the highest chance of nuclear war in my lifetime, let alone since my parents were kids. And as Alex discussed, the quality of our government revenue is viewed through growth, margin performance, durability, and resilience is unique to Palantir. We think this uniqueness will be incredibly important in the quarters to come. So essentially, they're saying their governmental business is going to be able to uphold them when things get bad and when things are really rough, and that will probably lead to much more profitable quarters as a result of the quality of revenue that they get. Look, we'll see if it happens. I suspect at least by 2023, Palantir breaks even or starts to make a profit. It could happen end of this year, 2022. Ultimately, we're going to see how it turns out. Chris Patel, he's one of my friends of the channel. We do a Palantir weekly podcast every Friday. He says, are there any new products you are looking to launch in the future? Sham answered this one. We have released so much new product. Pipeline Builder has improved data integration productivity 2 to 3 times at the NHS, autonomous sales and operation planning and execution, the hospital operations suite, Meta Constellation, Edge AI, and Edge Stream. And beyond new product, we are bringing to market 15 years of deep tech that we built to power Gotham and Foundry. This answer is like, okay. Like he's kind of like, yeah, by the way, we've been working on this for 15 years. Like, all right, I get it. But like, is there anything super new? Nexus Peering, our distributed data fabric, is going to power the next decade of DoD programs. I still don't really get Nexus Peering. They kind of talked about it in the presentation, not too much. That requires more of a deep dive, but I will go deeper into that. Apollo is going to take our customers from continuous deployment to autonomous deployment, and this is what we're focused on. Everything else, financials, performance, those are the consequences of the execution on this focus. So, I mean, they're not wrong. A lot of this stuff, we've seen this being used. The hospital operations suite, that's being used at the NHS. They're likely going to get a $313 million contract from the NHS, and I wrote about that on dailypalantir.com. You can actually go to that article right now. And if they get that, which is very likely, because I'm like, who else is the NHS going to pick? It's this article right here. It says 260 million, but it's supposed to be 313 million. Then, that's likely going to be Palantir. And then on top of that, Meta Constellation, they just launched a bunch of satellites into space with Satellogic, one of their partners. So, I mean, it is very likely that these new products that they've built are being shipped and are actually doing well. Jackson, this is from the Palantir Vision channel. Can you comment on the SPAC partnership strategy and its impact on the financials? What is the diligence level for initiating such an investment? So Kevin Kawasaki, global head of business development, says, revenue from these contracts has peaked in Q1 at around $39 million. That means they made $39 million bucks in Q1 from SPACs. And we have not had any additional new customers from this program as we've wound the program down. Going forward, we expect about $30 million of revenue per quarter from these customers. Revenue in Q1 is higher as a result of some catch-up of about $9 million recognized in this quarter, reflecting work we started last year. We saw roughly a negative 0.2% impact on earnings per share, EPS, from the marketable securities. When you look at this by geography, you'll see continued strength and growth in the U.S. business, ex-SPACs growing 65% year over year and 9% sequentially quarter over quarter. That means outside of the SPACs, they're actually growing in the U.S. business commercially, besides just their SPACs. And they're closing down the SPAC program. So they did this in 2020. They invested in a bunch of companies. I believe it was something like $226 million into these companies. Controversial strategy. I don't think it's controversial. I think it's actually a phenomenal strategy, especially if a lot of these SPACs end up playing out, which even if, 30% of them do, that will give a very strong ROI. But to get $30 million a quarter from these SPACs, not the worst thing in the world. Now, some of the SPACs are not going to do well, and that's just the cost of taking the risk to do this. But the way I think of SPACs is that it is a precedent for Palantir to be able to show the market that the newest companies, the most innovative companies in the world, are using their platforms to build their products on top of, which to me is a way to signal to the market. It's like pseudo marketing to the market by getting revenue and a meaningful equity stake within these companies. We've had our strongest quarter for winning new commercial clients overall. Commercial customer count grew 25% sequentially and up 207% from a year ago. And in the United States, commercial customer count grew 368%. That's not bad. I mean, that's not too bad. You cannot say that's a bad quarter or that's a bad result of growth. We expected continued growth in commercial sector customer acquisition, and as Alex mentioned, we see a path to double our U.S. commercial revenue again. We'll see if that happens, but I mean, that's not something that I would be upset about if they're able to pull off. We have two more questions. Noah A. Alex Karp said bad times are good for Palantir. What is Palantir doing during this time of war, inflation, and hyperpartisanship to back up Karp's words? How is Palantir solving the world's greatest problems? Now, they need to answer this question well because that's the whole investment thesis for Palantir, right? That they're going to be able to solve the biggest problems in the world. So, Sham says, this question is really important. The answer to it is literally Palantir. It is the reason that we exist. As Alex has mentioned many times, we have been building out our companies and our products for this world. And as our customers confront rapidly escalating conflict in Eastern Europe, runaway inflation, disrupted supply chains, and a new wave of refugees, our products have become more essential than ever. I've already talked about how we are helping governments to respond to Russia's invasion and the resulting humanitarian crisis, from Meta Constellation and Edge AI to powering refugee and relief operations. Meta Constellation in terms of geospatial intelligence that they're doing in space, right, to look at things that are going on in Russia and Ukraine from a sky-live view and then bringing that information back to Earth. And then refugee crisis, we know that Palantir is partnering with the UK, Lithuania, Poland, all these other countries to help them with the Ukrainian refugee crisis. But it's also important to understand that a chain of events has been set in motion, a Rube Goldberg-like set of bangs, borings, and ricochets that extend and will continue to extend in every facet of the world. Food is short and prices are exploding. The availability of fertilizer required to grow more food is disrupted. Commodity prices are skyrocketing. Neon glass, CF64, palladium, all disrupted, all crucial in the semiconductor supply chain. Ukraine is a major regional center for clinical trials. All of these trials and the life-saving medicines behind them are disrupted. Simple but essential automated components like wiring harnesses and seatbelts are disrupted. All of this is coming on the back of a dynamic disturbance from COVID and the resulting supply and demand shocks people are still coping with, and the emergent wave of shocks that will come from the extended severe lockdowns in China. That right there was a big one for me. I didn't know Ukraine was a major regional center for clinical trials around the world. I didn't know there were that many different supply chain shortages in relationship to semiconductors and food shortages. So it's like there's a lot of stuff going on. The question is, can Palantir execute and capitalize on all that chaos by having their software solve those problems? To solve these problems, you cannot operate on software that was built to assume a stable world. In the stable world, you can make plans and you edit occasionally. This plan is static. The assumptions are fixed and immutable. In the real world, in this world, you only make a plan so you can change it. You need all of your data ontologized in your digital twin, flowing into dynamically delivered applications that connect to each other. That's like the core thesis, I believe, of like what this ontology argument and how Palantir can centralize operations and ultimately produce results means. You need your AI to move faster than the rate of disruption. When something goes wrong, it needs to tell the person at the coal face-to-face what to do next. Inflation flowing through your supply chain means you need an entirely different new approach to manage supplier logistics and production. Our work with Tyson Foods is delivering $10 million of value realization every week by moving them from legacy approaches like integrated business planning to autonomous sales and operations execution, by moving from a static plan that was assumed to be right by autonomously planning understanding where you are going turn by turn as they are dynamically updated to navigate around unforeseen obstacles. Essentially, we're bringing companies into the new digital world, and we're doing it in a way that other companies cannot. Literally every function of every business is breaking under the stress of these events where the aftershocks are strong and more profound than the initial earthquake, and Foundry was built for this. And if you believe in that thesis, then you ultimately believe in Palantir. So those were some of the main questions that were answered by Shyam Sankar and Kevin Kowalski and David Glazer, some C-suite executives at Palantir. Look, I think the answers to the questions were good. I do think it was kind of weird that it was like rehearsed and it was like said in this kind of robotic way, but nonetheless, I think the core answers we got were important. Share dilution is not increasing at the level people they think that is. I think at this point, people are just saying that because they just want to say that stuff. That is incorrect. New products are coming out and new products are being implemented in a variety of different scenarios. That is good as well. And the idea philosophically that Palantir is meant to solve a hard world or be in a world that is very difficult and they're going to provide solutions that are meaningful. I think Shyam gave a lot of examples from supply chains to COVID, food disruptions, like all these different things that make you think, okay, like, yeah, these things are bad and we probably should do something about it. It's why Alex Karp started off his the earnings call by saying, look, nuclear war is more present than ever. The question is, ultimately, are they going to be able to capture on that growth? And the video I just did breaking down my Palantir earnings, that kind of is where I got into my thoughts of like, how much growth can they get? What does the growth mean relative to where else they can perform? What are they guiding for? All of this stuff they're setting up. It's like a kind of an alley-oop, right? When you're in basketball, like they're throwing up the ball and now they have to dunk it. They threw up the ball. They got us to believe that they're going to dunk it because we understand there's all these problems and this is the company that you want to bet on to be able to solve those problems. The question is, if they solve those problems, A, are they going to grow? And B, can they actually solve those problems because the market, meaning customers, want them to solve those problems? That is yet to be seen. But if there was any company I was going to bet on to be able to solve those problems because I think those problems are real, it would be Palantir. So those are my overall thoughts. Let me know what you guys think about how they answered the shareholder questions, the questions that they picked, and if you liked the responses they have to shareholder questions in the earnings call. Thank you guys so much. Thank you guys so much for watching. I will see you in the next one.